going to be, I guess, the impacting factor today? The fact that it's been quite a bit of extension of losses overnight that you've seen for the US futures alone. And I mean, to be honest, when the US futures started doubling mid-afternoon yesterday, you already saw that rub off on our market. So we couldn't quite sustain onto the gains that we started off the day with. Sure, we did have our fair bout of intraday volatility, but towards the end, we closed in at the session lows. On the futures alone, we were down about almost 135 odd points, with the breadth completely skewed in favor of the declines. And why not? Because while we were closing in for the day, you had the US futures already indicating a very steep loss. And that's exactly how they shut shop the day with as well. You have inflation fears because of the tariff implementation, and that's going to have some recession fears as well that are playing out in the sentiment in the market. So it was a good 900 point thereabout knockoff that you had for the Dow overnight. The S&P fell about almost 3%, and the Nasdaq as well got clobbered of 4%. That's how steep the loss was on the Nasdaq itself. And even the broader Russell 2000 index, that knocked off about almost 300 points. That said, Asia is pretty much mirroring the same sentiment. Even markets like Hong Kong and Shanghai are down. Not as much, of course, as Japan, for instance, which is now staring lower by about almost 600 points on the Nikkei. No wonder then the implied open is not really indicating a very big move for us. That also is still soft, down about almost 0.5%. So today, to start off at least, I don't know if the intraday dip is going to get bought into for our market or not, because increasingly it's becoming a trader's market. But today we're going to fall prey to global cues.
Asha, I see the setup very differently. There were times when we would say, okay, US markets was the ultimate benchmark of what would happen to India. I think that has changed. On the way up, we were not participating. And on the way down also, when US markets have started correcting, I think we've not participated. We've fallen and we've fallen less. Let's understand, guys, what's happening. What is happening? First, Donald Trump welcome back trade has faded away completely. So when US President Donald Trump, he came back, market started the cartwheels, the bulls started doing cartwheel, that entire excitement, euphoria, market adjustment, long dollar, long Bitcoin, that trade has reverted. So for me, that is headline number one. It is that whatever excesses which got created there, I think markets now are adjusting to that. This was a very overdue correction. Why? Because Aisha, I'll give you some data points here and then we'll talk about it. I mean, last week we were talking about growth in US economy, markets went up, and today we are talking about recession. Growth does not become recession. This is language which people are justifying, trying to put the reason. This was a much awaited correction. We've been talking about it. US has 5% of the total world population, and 70% of the total market cap of the financial markets in the world is in US, and 60% of the total debt in the world is in US. Obviously, this had become too big and too bloated. So this entire Trump excitement which came in the market that, we will make America great, that excited the market, and our realization has kicked in that those excesses are just getting chopped out, and the correction is getting picked up in pockets where it hurts, which is the US tech stocks, Bitcoin, and perhaps, some of the high-flying biotech and all those stocks. So I'm not surprised with the correction, but the messaging from the market is that US had become Humpty Dumpty, and that Humpty Dumpty has come cracking down, and I don't think we are done with the excess correction there. What it means for India is what we need to understand. Okay, that's a bad headline. I think incrementally things on the margin are really changing for better for us. The dollar index is down. FI selling seems to be reducing. Crude is on our side. The narrative is that if world now starts thinking that US dollar has peaked out, and if US markets have peaked out, for money managers, they would say, look at China, look at India, look at Japan. They were looking US, now they will say, okay, look at India, look at China, look at Japan. I don't know where they will go, but they'll start talking like this. And then India is very sensitive to crude. We've seen over the years. If crude goes down, you do in a good shape. So our local indicators are getting better. Global indicators which were troubling us, they are settling down. And on the macro front, yields and crude is something which cannot be ignored. So for me, you will get hurt, but you will not get hit. That's my point.
Okay. And I think this Signs are pretty much there. I mean, look at some of the poster boy stocks, for instance. Look at how Tesla has performed since Trump took over, or for that matter, how much it's actually lost from its, 52-week peak. It's down almost over 50%, mind you. You know, we don't typically see a daily fall, so we don't really look at the kind of fall that Tesla has had from its all-time peak, but it's down a good 50%. And even since Trump got into power, that is, it's down about almost 5% since there. And yes, the movement of the dollar, the way some of the other risky asset classes like a Bitcoin has performed, I think pretty much all asset classes have eased off and have sort of unwound their rally since Trump took over. That entire euphoria is clearly fading away.
Tesla is like a canary in a coal mine because of the kind of relationship which Donald Trump and Elon Musk they are enjoying. The markets are telling you that okay, you may have great friendship, but there is a BYD and there is a slowdown which we need to really worry about. So Tesla stock is reminiscent of what the market tells you which way that company is moving, and they're not really excited about that jugalbandi, if I may use the word, which really is at play. At least, yep. I didn't want to use that word. It's actually used, which is being used in financial markets also these days. Yeah. It's a widely accepted word right now. Yes. But I will still stick to Jugalbandi. I like that better. They have Indian audience.
Sure. Something musical to start the day with.
Yeah. So that's the point. I mean, that stock's coming down. I sincerely feel, Aisha, that again, going back to India, and then we'll put that graphic out, that what it means for us, you will fall less. The markets are showing signs that they're settling down. RBI has pivoted. And one more point which I want to say is that a lot of folks I've spoken to last week, we had like a BBO fund managers who really came in, 4-5 fund managers, and all of them are saying that we've started dialing them back to India. Yeah. So it's not time to be, you can't go all out. It's not that Indian markets are permanently bottomed out, but I think it's time to load up the truck, back the truck and start loading it, which is that if you have cash, start buying it. If your commitment levels are low, start increasing it. If you want to increase your SIP, I think it's time to perhaps, not double up your SIP, but maybe increase your SIP exposure by 10-15%. Yeah. So these are the times when you actually start shopping rather than running. Because right now, to come out and say that, okay, buy when you've taken a hit, you don't like it. But that's the way markets are. You got to buy the fall, you got to buy the pain, you got to buy when there is the blood fear on the street. Yeah. So I think we are reaching that point of climax where globally if things turn, it'll be better. And just to supplement one more point that why I think Indian market will do well is that just look at two institutions, SEBI, new chief, RBI, new chief. They both have happened in a matter of 6 months, and they both have already started demonstrating that how they want to change. So RBI has pivoted. SEBI wants to communicate wherever public forum they've stated that we are, looking at coming out easing things. So on the regulatory front also.
And the finance minister hinting about, GST rationalization over the weekend.
Yeah. So the Trinity,
all engines are firing.
Exactly. See, more than firing, Aisha, the acknowledgement is coming. Okay, guys, we know that, there is a problem.
But we'll correct it.
We'll correct it. Whether it gets, one is attempt, which they are trying to do. Second is the effort. And third is the result. I don't know what the result would be. But the attempt and effort and recognition, I think, is important. So regulatory action, pivoting of government, dollar, all those factors tell me that, folks, don't be too bearish. That's my limited point.
If you like this video, then like, share and subscribe to ET Now.